This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Traders are bracing for volatility after Wall Street gets a reality check from disappointing tech earnings. The S&P 500 tumbling to its worst day in more than 18 months. The yen's rally gaining steam, though, as it barrels through key levels, with global carry trades unwinding ahead of next week's BOJ rate call. And President Biden to tell Americans he's passing the torch to a new generation as he explains that decision to drop his re-election bid. We do have breaking news when it comes to the GDP data out of South Korea at the moment, just crossing the Bloomberg there. We are getting that second quarter GDP, the economy contracting 0.2%. The estimate was for a modest gain of just 0.1%. The expansion when it comes to that year-on-year number of 2.3%, still shy of estimates of 2.5%. So that was a pretty sharp slowing in the second quarter. We had an unwinding of temporary factors that boosted the pace in the first quarter. So an unfavorable comparison, if you will, when it comes to that quarter-on-quarter contraction. Declining construction investment seen as the biggest drag. We're also getting, when it comes to the numbers crossing the Bloomberg, SK Hynix here as well. The second quarter net coming in at 4.12 trillion won. That is better than estimates of 3.79 trillion, I should say. We're getting sales numbers coming through for the second quarter of close to a 16.5 trillion won there, also higher than estimates. The operating profit at 5.47 trillion won, beating expectations of 5.24 trillion won there as well. So pretty lofty expectations for SK Hynix going into these numbers. They were projected to more than double their quarterly top line growth. Really a reflection, as you see in these numbers, in the lead that Hynix has had in supplying that essential type of memory for AI development. That June quarter revenue really seen being boosted by well over 120%. That is now a second straight quarter of positive net income. And it does also, as sort of a broader picture, if you pull out a little bit, that the memory chip sector overall is showing that resilient emergence from what has been that years-long slump in the cycle. We have seen that stepped-up data center construction happening quite broadly. Bloomberg Intelligence saying that that strong rise also seen sequentially as well. And we have seen expectations really boosted after strong results from the likes of Samsung and Micron as well. So SK Hynix one to watch in the session as we take a look at how we're shaping up across major markets set to open across the region over the next hour or so. Take a look, I should say, at the picture. Bit of divergence there, a little bit of weakness there coming through from Australian futures, off by just about 1%. We are seeing perhaps a little bit more strength for Chicago Nikkei futures and trading more broadly in Japan, even as the moves that we've seen in the yen continue to kind of sow some concern that we could be back to that momentum of yen weakness, particularly if there is kind of a downside surprise with maybe not a rate hike as largely hoped for and expected from the Bank of Japan next week. But a lot of this is sort of following on the sell-off that we've seen in global stocks. Take a look at our US futures sort of positioning at the moment, as we did have in the overnight session that pullback in the AI trade. Of course, a disappointment that we've seen out of the Mag 7 earnings so far. S&P futures, though, looking a little bit more positive there. We're also seeing a little bit more of a return when it comes to NASDAQ 100 futures. China stocks, though, we did see a slide of almost 2% for the NASDAQ Golden Dragon Index there, and that could sort of bode for a bit more weakness as we get into the start of trading across Greater China markets. Let's bring in Belita Ong, who's a chairman at Dalton Investments. Belita, always great to have you with, particularly as we see this market sort of potentially on the cusp of, a lot of people are talking about this rotation trade out of tech and AI, right? Do you think this is the time, and how much of that really depends on what we hear from central banks?
Thanks for having me back, Heidi. I think that the weakness we're seeing in tech currently is more to do with concerns that should Trump become president again, that he would have sanctions against companies that sell to China, and that seems to affect the companies that do have some amount of business with China. The tech cycle, we think, is the chip cycle anyway, is bottoming out, and the trend towards tech growing, I think, is still very much firmly in place. So I don't think this is a sign of a weak trend that's emerging, that's a longer term trend.
I'm glad you brought up the political risk, right? Because markets have kind of tended to be very good at ignoring it or finding the positive. In this case, you've got the Trump trade basket, the Harris trade basket, if you will. Do you want to be playing on these themes, or would you be looking for more international diversification, outside of the US exceptionalism story that's really driven global markets so far?
So we focus on investing in Asia, and specifically in public companies in Asia. And to us, political events and even news cycles and earnings cycles don't affect our views of companies to invest in as much as the core underlying trends and the way that the company operates. So we look for really good companies with a moat around their pricing that have been operated by competent managers for a long time, that we can buy at reasonable prices and have managements who will look after the interests of minority shareholders like us. So the volatility caused by more short-term events for us is a way to either get into a position or scale out. So with that said, our view right now is that prices in the US specifically are pretty extended, but there are still very good bargains to be found in other parts of the world, specifically in Asia, and in particular in Japan.
Yeah, I really sort of enjoyed your analysis on Japan, because there's been a lot of kind of head scratching as to what this next leg of the rally will look like. How selective are you at the moment? What are you looking for in terms of Japanese companies that perhaps haven't fully benefited from the exuberance that we've seen?
So Japan was in such a terrible slump for so long that people almost have forgotten about it. And the last 2 years have been very good. So it was up about 25% the year before, and this year's already up about 20% in yen terms. The rally, we think, has a long way to go, because Japan, by any standards of developed markets, is still quite cheap. And we prefer to look at it more as an EV to EBITDA. That takes into account the cash on the balance sheets, because Japanese corporate balance sheets are bloated with cash, core shareholdings, and so forth. And if you can buy a Japanese company, you can buy it at incredibly reasonable valuations. Most of the things we look at trade at under 6 times EV to EBITDA, which means if you own the whole company, the value you're paying for the company can be earned back in just 6 years. It's really quite remarkable. So when you look at it that way, the Japanese rally has a long way to run. And this is even the view of the Yamaji-san, who heads up Japan Exchange Group, and he essentially, his entity runs the stock markets in Japan, and he has gone around the world and has been talking to investors about how this rally has legs, and the corporate governance reform that is going on will continue and will really revalue companies in Japan.
I'd love to hear about some of the specific companies that you're watching, and I know Fuji Media is one of them.
Yes, so Fuji Media is one of the large media companies in Japan, and it trades at a ridiculous valuations, about half of book and about 2.1 times EV to EBITDA. And so you might ask, how can a company that's profitable be trading at such valuations, especially when you look at their cross shareholdings, which are worth more than the valuation of the entire company? And the reason is because there is this law that protects Fuji Media in that foreign ownership cannot have more than 20% in voting rights. But the Japanese private equity firms and activists in Japan are actually much more active than they used to be, and they will be more than open to becoming activists against Fuji Media. So we think that the pressure from the Tokyo Stock Exchange and from activists in general will be effective in encouraging Fuji Media's management to either increase dividends, share buybacks, or even agree to a management buyout, which would be very good for shareholders.
It took, as you say, a long time for Japan to get to this point, and obviously that suggests that Korea will also take, similar effort to make the same amount of progress. But for a longer-term investor with that view, should they be looking at Korea right now?
So Korea is a very small market in terms of the overall MSCI basket. And because of that, most institutional investors ignore Korea. They just buy it as part of the index. For someone like us who specialize in Asian stocks, it's a great opportunity because there already are companies that have taken steps to treat shareholders fairly and are managing their balance sheets in a reasonable fashion from the point of view of the investor. And with those companies, the potential for appreciation is already here. With regards to the broader market, we need to see more changes to the tax treatment, even simple things like having corporate communications all in English, and that's coming, that will happen this year. And also just simplifying or just improving the tax treatment to investors, so on dividends, and lowering the overall tax rate, because that's one of the main reasons that you see this depressed valuation in Korean companies. The patriarchs and the families that own these large conglomerates don't want to pay estate taxes. And so they sort of keep the price depressed so that they pay less in estate taxes when the patriarch passes on. So there are many things that can be done in Korea that are similar to Japan in terms of getting management to treat shareholders fairly, but it's going to take, I think, quite a long time.
The sort of popular trade across Asia EM has been sort of reducing exposure to China and more inflows into India. Do you think that continues? There's sort of some policy efforts out of China. It certainly is very cheap. India is still very expensive, and now there's sort of the capital gains tax aspect to perhaps be concerned about as well.
Yes, we saw that, and it's a little concerning, but given the rates of growth in India, both in terms of earnings and in terms of the size of the market, the consumer market, the potential for long-term growth in India is enormous. And when you look at India, it's already growing in terms of its percentage of the indexes, so we'll get more foreign capital because of that. And the FDI, the foreign investments in India, are still growing. Some years are more than others, but it's still very much growing. If you look at the domestic investors, they're also growing. We're seeing record numbers of brokerage accounts being set up in India, and they are investing in their own country. So the reforms that the government has taken in the last 10 years have really poised India such that it's ready to take a fast growth path upward. And in fact, I think the forecast for growth next year is something like 7.5%, and then maybe 8% the year after that. So it's very optimistic, and for good reasons, I think. So we rotate more among stocks because, as you say, the market overall is expensive. But if you watch carefully and you rotate to cheaper companies when they're out of favor, but are nonetheless geared towards the growth in India, you can still do very well.
Belita, always great to have you with us. Belita Ong, Chairman at Dalton Investments. Coming up on the Asia Trade, we get an update on AI regulation. Analytics company SAS joins us, and also talking about why effective governance of the new technology is a market positive. UBP's head of equity research will be along with us too to tell us why they're still cautious on China. This is Bloomberg.
For the forces of civilization to triumph, America and Israel must stand together. Because when we stand together, something very simple happens. We win, they lose.
Israeli Prime Minister Benjamin Netanyahu addressing a joint meeting of Congress. Netanyahu also urged the US to fast-track weapons to Israel in a defiant speech railing against those protesting the war. Balance of Power Cohen Kaylee Lyons joins us now from Washington. And Kaylee, we saw, protest to this very visit, right? But a very fiery, defiant speech from Netanyahu.
Yeah, absolutely. He had much more of the kind of fighting rhetoric than anything conciliatory or resembling the idea that he is looking more toward a ceasefire than absolute victory over Hamas. You're exactly right in that there were a lot of protesters here in Washington who did not want Netanyahu to be given this honor of addressing a joint session of Congress. Netanyahu did speak about those protesters during his speech, talking about how they were affiliated with Iran, essentially. He called them he alluded to that at some point. He also suggested that they were on the side of evil. And so that was one of the reasons why many Democrats were upset with what they heard from Netanyahu. Of course, many of them were not actually in attendance in the room. They, too, were kind of boycotting, if you will, this speech. But some of the rhetoric around this notion that the war in Gaza could end tomorrow, but only if Hamas surrenders, disarms, and returns all the hostages, maybe not the progress toward a ceasefire that some lawmakers were hoping they would hear from Netanyahu today. It's also worth pointing out, of course, that Netanyahu's visit here in Washington is not over. Tomorrow, he's going to be meeting at the White House with President Biden and then separately with Vice President Kamala Harris, who was not presiding over Netanyahu's address today, as she typically would. She was on, instead, the campaign trail out in Indianapolis, but a lot of Republicans criticizing her for that, although I would note that J.D. Vance, the vice presidential nominee and Republican senator from Ohio, wasn't present in the chamber today either.
President Biden is also set to address the nation shortly. You know, it's an interesting speech in terms of the tone and the content, right? Because in a lot of ways, the explanation we're expecting, you know, events have sort of run past that already.
Yeah, it's true. We heard Biden days ago, or not heard him, but saw the statement he released announcing that he wouldn't seek re-election. And it is now days later that he's going to explain that decision to the American people. We have gotten some excerpts of the speech, so we know in some sense what he plans to say. He's going to try to cast his exit from the presidential race as something done in an act of trying to preserve American unity. He will say he's decided the best way forward is to pass the torch to a new generation. That is the best way to unite our nation. He also plans to say that the defense of democracy is more important than any title. And this is going to be a complicated speech because in part it is going to be a speech about his legacy and what he has accomplished during his 3.5 years as president. It also in part will be about what he wants to accomplish in the remaining months of what will be his first and only term, and that may be inclusive of a ceasefire agreement between Israel and Hamas. The president really wants to see that done and see peace in the Middle East before he leaves the Oval Office. But of course, a lot of what he can accomplish will depend on whether or not he has the cooperation of Congress, which may be a difficult ask. And then we're also looking to see what he has to say about his vice president and the woman he has endorsed to take his place as the presumptive Democratic nominee, Kamala Harris. So it's going to be pretty heavy in terms of the speech we intend to hear from the president later on today. Probably a very difficult one for him to give as he made this difficult decision to not seek a second term.
And in the meantime, of course, you know, that the new torchbearer, Kamala Harris, is on the ground running. And it's quite interesting, a lot of expectations in terms of a focus on, you know, civil rights issues, more progressive social issues, and certainly the emergence of race as being one of the key focuses in her campaign.
Well, absolutely. And by nature, this is a historic campaign when it comes to race. She is not only running for president of the United States as a woman, but as a woman of color. And when she was in Indianapolis earlier today, she was at an event for a black sorority. But this is just one of the many stops she has had on the road this week. She, of course, was in Milwaukee, Wisconsin on Tuesday, a key swing state. Tomorrow, she will be heading on to Texas for an appearance there. As she obviously has to meet with Netanyahu as well. And in the meantime, she has a lot of work cut out for her in selecting who she would like to be on the ticket with her as her vice president. The Democratic National Rules Committee finalized those rules today, which dictate that sometime between August 1st and 7th, they will have a virtual roll call to officially nominate Harris and her vice presidential selection as the Democratic president and vice presidential ticket. So she has to decide who that person is going to be by the first week of August. We understand on the short list there are a few Democratic governors, Governor Roy Cooper, for example, of North Carolina, Josh Shapiro of Pennsylvania, even a senator in the mix as well, Senator Mark Kelly of Arizona, all of them, of course, representing swing states. And so the vetting of those candidates is what's going to go underway in very rapid fashion, as she doesn't have much time now to make that decision.
Balance of Power co-anchor Kelly Lyons there in Washington with the latest. We're also watching Chinese stocks today. We saw in the US, of course, that big decline in the Nasdaq Golden Dragon Index. Also, the CSI 300s fall at the fastest pace since the sell-off early this year. That rout sparking fears. The market is again headed for a free fall despite policy buffers in place. For more, our China correspondent Min Lo joins us now from Hong Kong. So the disappointment over the third plenum, even the kind of, you know, collective shrug over the PBOC's earlier than expected rate cut, we're still seeing these steep losses.
Yes, that's right. I mean, the CSI 300 this week has been down more than 3%. That's the biggest drop we have seen since end of January. It is that pessimism in the economy, the disappointment from the plenum, and also partly because the so-called national team, its activity has been slowing compared to the previous week. We know they stepped in to prop up the market during the third plenum. Judging from yesterday's movement as well, we believe that they have taken action in the morning to help pare back some losses. But we know, throughout the year, the national team has been pretty pivotal in helping to put a floor under the stock market this year. Part of that weakness is also driven by fund flows as well, because redemptions from mutual funds this year, in the second quarter at least, has hit one of the highest levels since 2005. So there is now a fear that the Chinese stock market is in a persistent downward spiral, with rebounds lasting no more than a few weeks. And looking ahead to that Politburo meeting as well in July, there is just not a lot of optimism that any measures coming out of that meeting could kick off a sustainable rebound. And Goldman Sachs as well believes that Chinese stock market could take a big hit if Trump comes into power and imposes that 60% tariff on Chinese goods. The projection is that earnings of that MSCI benchmark could be down by 8 percentage points next year.
And that leads to kind of the interesting theory, right? When it comes to fiscal firepower, some economists now thinking along that vein that Beijing may be saving some of its options for the kind of worst case scenario policy measures under a second Trump presidency.
That's right. That's Goldman's take as well. They believe that China could be saving up some of that fiscal firepower in reserve in case of a potential Trump presidency and administration that could potentially impose those 60% tariffs on Chinese goods, and that could hit Chinese exports. They expect that that would shave off 2 percentage points of real GDP growth of China. And this comes as China has been quite cautious in its demand side and fiscal stimulus as well. Government spending in the first half of this year has been down nearly 3%, prompting economists to get the government to expand its budget deficit and to issue more sovereign debt to try to do more heavy lifting for the economy when households and businesses are not willing to spend. But of course, this is Goldman Sachs' take on the economy. We have spoken to other economists as well who thinks that the government should front load those stimulus policies before the economy gets in a rut. So far, we have seen monetary policy-wise, the banks cutting that loan prime rates earlier than expected. There are expectations that they could cut in the fourth quarter as well, but it also reflects the tough position they're in because they have to balance the FX stability and also the profit margins of banks as well.
Our China correspondent Min Min Lo there with that balancing act for Beijing policymakers. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at what we're seeing trading in the yen. There's really some momentum now, potentially seeing that renewed sense of weakness in the currency. Potentially, if we get to that BOJ decision with some disappointment. At the moment, we are seeing just that rapid move higher, really slowing big implications when it comes to some of these global carry trades. This is Bloomberg. Well, we had some quite resilient numbers out from SK Hynix over the past half hour or so. Revenue more than doubling. The AI demand story continues to power on. That quarterly revenue more than doubling, and that really kind of supporting hopes that this global boom will persist well into 2024 and beyond. Hynix is, of course, a key partner to NVIDIA Corp. They supply the chips to train AI intelligence models. We saw sales of $11.9 billion. That was better than expectations. Operating profits also coming in stronger to expectations there as well. There has been sort of, particularly across the sell-off that we've seen across big tech, some of those concerns that maybe AI spending will start to pull back as the curbs when it comes to the US on China begin to take hold. But of course, we see these numbers perhaps supporting a different narrative. Regardless, we had Morgan Stanley earlier cutting their chip sector stocks, including Hynix and TSMC as well, from the focus list as well, saying that perhaps there is the time now to take a bit of a breather. And of course, this is key to South Korea's broader economy, which flipped back into reverse last quarter after hotter than expected growth at the start of the year. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, we know that the sort of comparison maybe was seasonality as well and some sort of unfair base effects, but still, this is not a great read.
No, it's not a great read, and I actually think the lead-in that you talked about perfectly illustrates the conundrum for investors right now. You've got SK Hynix reporting great numbers, everything's good from its point of view, the AI boom is still powering it ahead. South Korea's economy, meanwhile, is just stumbled. I mean, yes, again, harder than expected before, but stumbling now. And that's the worry for investors, is that the AI boom is taking a particular narrow set of companies and sectors higher and higher, and maybe has already taken them too high, especially because the doubts are growing to the extent to which the AI boom is going to lift all boats. There were people talking overnight about concerns that for a lot of companies right now, AI is an expense, not a source of profits. They have to spend money on it, but when, where, how, and how much, they get the returns on that. That is far less obvious, and it looks like it might take some time. So that helps to explain part of what investors in general are looking at. And then when we look at the South Korean economy slowing, that immediately underscores the growing voices saying that central banks need to act sooner rather than later. Bank of Canada cut overnight for the second time. We had former Fed President William Dudley saying in an opinion piece he thinks the Fed should cut next week. So, rate cuts are on a lot of people's minds as the tech sector stumbles in the stock market and as economies show signs of cooling down.
Yeah, and as you said yesterday, that's kind of the key to the rotation trade, right? It's interesting when you talk about Korea and this divergence, because there are a lot of people watching what's going on in Japan and thinking, well, yes, Korea's a smaller market, but that governance story could follow the same path. Is that a good long-term prospect?
Yeah, that could be a good long-term prospect, and again, it highlights too the need for for countries, for markets, companies in general to have a story that's about a broader picture. There's an overall reason why you want to be investing, here in this place and in these companies, not just because they happen to be in the same geographical location as a couple of chip makers that are doing really, really well on the back of NVIDIA. So that's Korea has long had some concerns on the corporate governance side. The era of the chaebols had some difficulties on that front, which was also, that was sort of similar to the way Japan had set up its economy and its market. So that would be the thought. If Japan can turn into a good news story on the corporate governance front, and that can set up the sort of astonishing rally that we've had in Japanese stocks, then why not South Korea? And again, they need that if you've got an environment where the AI boom is starting to look like either it's coming off the boil or just that it's too narrow to carry a broad market.
Garfield Reynolds, who leads our Markets Live coverage there, going through those SK Hynix numbers that we got earlier, as well as the South Korea growth numbers. But this is the major story that we're watching across markets, of course, is momentum that we continue to see when it comes to trading in the yen. So much of this built into expectations, right, that the BOJ will come through with further tightening at the end of the month. This is also really putting at stake a lot of the yen carry trades that we've seen, and certainly the big impact that we've seen on the Aussie dollar, for example. Very, very pertinent in this session. Let's bring out FX and rates reporter Michael Wilson. And Mark, it's really interesting seeing this kind of pick up pace, right, this narrative as we get closer to the Bank of Japan, despite some concerns that the domestic weakness, the domestic consumption weakness could actually give them pause.
Yes, good morning, Heidi. I think that you're quite right. That is the fact that we've got the BOJ next week, it seems to be everyone's scrambling to unwind these things, just in case they do the 10 basis point tightening or maybe more. There's a couple of Japanese banks thinking they might even go 15, and it's that sort of narrative. It's scaring some pretty old money out of their positions, or trim them back at least. But then, as you say, you've got the spending profile up in Japan, which isn't exactly stellar. And to that end, I think BlackRock, we've put out a note today, this morning, about they think that it'll be like a hawkish hold type thing, and we may not see Bank of Japan move on rates at this meeting, which in and of itself would see people maybe reload those short yen positions, and we might see it stabilise a bit. But for now, we're the big level everybody's probably looking at is that 151.86 post-intervention low. If we're below that, heading into the Bank of Japan next Wednesday, that's going to be very interesting. And on right adjacent to that is the 200-day moving average, and we've already been through the 100-day yesterday. It's getting a little bit of a scramble. We're not talking capitulation yet, but I think if the BOJ do deliver a hawkish hike, as it were, we could easily be sub 150 without much effort at all, because I think the market still has a lot of old longs, dollar yen longs, Aussie yen longs. Aussie yen, is down about 7%, I think, peak to valley this month, which is rather huge, and it correlates well with the Nikkei, which is down approaching 8%.
What are you watching when it comes to some of these other cross-asset implications, right, as cheap yen funding dries up?
I think that the way that there's been a few theories around that, but as it stands now, it's not like a seasonal thing, and I think it's more of the funding is an issue. But I think the market's looking at the broader implications of there's so much money that's still on this carry trade that the funding it probably just adds to the imbalance, as it were. Makes the exit door a little bit smaller, but I think that overall the market still has a little bit further to correct before we find a floor, as it were.
FX and rates reporter Michael Wilson watching that carry trade. How much unwinding we've seen those positions as we head into the Bank of Japan at the end of the month. You can get a lot more analysis on our Markets Live blog. That's on the Bloomberg. MLIV Go is where it's at. You can get that market rundown in just one click. There's, of course, that ongoing commentary and analysis from our team of expert editors. A lot of focus when it comes to the pullback that we see in the Aussie dollar as a result of the strength in the yen. You can get that on exactly what's affecting your investments at any given point. This is Bloomberg. Get back to the US presidential race now, and the tech sector is closely watching that contest for clues on the next administration's regulatory plans. The Brookings Institution says a Harris White House may continue President Biden's tough antitrust enforcement, while re-elected President Trump could make big tech deals easier. When it comes to AI, Brookings says Trump supports a lighter regulatory touch, while Harris has highlighted the need for public oversight. Let's discuss all of this, plus the outlook for global regulation, with Reggie Townsend, who's the Vice President of Data Ethics Practice at analytics firm SAS. Reggie, great to have you with us and here in Sydney. First of all, do you agree with that when it comes to, I guess, the reading the tea leaves as to what we could expect from either President Harris or President Trump?
So it's interesting. The advisory committee that I sit on for the U.S. advises the president and the White House. That committee was actually formed under the last Trump administration. It was actuated in the Biden administration, but that probably had more to do with timing than anything else. So far, AI has been a bipartisan issue in the U.S. I hope and expect that will continue to be the same.
How much of that space is also encroached upon, sort of not just the investment, but also the ability to, insofar that the US can regulate, I guess, the impact of what China is doing in that space? So
what's interesting is you've got about 40 countries roughly around the world that are looking at some sort of AI legal framework right now. they're all trying to figure out roughly the same thing, which is, do we regulate a particular technology or do we regulate particular use cases associated with that technology? We're talking about democratic nations when we talk about that 40. China is in a different situation. They can make a few rules and execute those rules a lot more quickly. But that is not necessarily an advantage. I think consensus matters here, and I think the ability to interoperate with these systems is also very important. And I think over time we'll get there with the proper approach from a regulatory perspective, both vertical and horizontal.
Do you think you'll get there in the sense that there'll be cross-border consistency in these regulations among the 40?
Well, right now that's the attempt, right? I think that the AI safety institutes, as an example, that you see cropping up around the world, are attempting to at least have some form of standards as it relates to safety. Whether or not we regulate AI the same, probably not, if I'm honest with you. Look, societies are different around the world, and so their needs are going to be different around the world. So you can't have a one-size-fit-all regulatory framework, but what you can do is put the necessary guardrails in place to account for the needs of the particular society, and that's what the legislators are up to.
The worry is that the technology has gotten ahead of the ability of regulators to actually be able to rein it in, right? When you take a look at, say, for example, this presidential campaign, not to mention, previous political campaigns, does that worry you when it comes to the kind of degradation of trust and credibility?
100%. Look, the trust factor is huge. But I think what's important to note, there's something like 55% here in Australia, 55% of Australians say that if government works with business on matters associated with technology change, they trust government more. And so I think it's important to note that government doesn't have generally the expertise necessary to properly regulate, so they have to depend on the folks who actually know things about this stuff. And so far, in most nations, at least those that I've been working with, that has been true. There's been willingness to understand what's going on in the private sector. Will they ever catch up? No, but I don't think government should have the responsibility of moving at the speed of tech. That would be a dangerous thing for all of us. But I think they're doing as good a job as they possibly can do, and right now it's up to us in the tech sector to actually assist.
The money, the investment, the progress in tech is being made with the companies, right, with the private sector. So when you have someone like Elon Musk, for example, with XAI, that product is obviously going to reflect a certain world view. Is that sort of a conflict when it comes to what the potential framework might look like?
Yeah, so at SAS, and I can't speak to XAI per se, but I can talk about what we do at SAS from a governance framework perspective, because I think it kind of hits the point that you're getting at. We think about it from really 4 pillars. First is oversight, having a proper level of understanding about how AI is being bought and sold in the organization. There's an operational aspect of that, what the enabling infrastructure might be necessary to bring the AI to the marketplace. There's a regulatory piece, making sure that we are adequately compliant. Then there's a cultural piece, and I think that's what you're really getting at, Heidi, is all of this governance activity associated with AI only moves as fast as the speed of culture. And so if you've got a culture of people who lack empathy, then you're going to have AI that lacks empathy. But if regulators have their say, and if folks like us at SAS have our say, we're going to make sure that we're baking that empathy, and we're being ethical by design so that empathy comes through into the marketplace.
That makes me think that the response that you get from individual data companies and tech companies must be sort of wildly divergent. There must be a spectrum in terms of the willingness to comply, but also to engage.
I'd say there's some variability for sure. But I can tell you, at least in the responsible AI community, it's a highly collaborative community. So I can pick up the phone and reach out to peer organizations who are doing similar work as I. Now, we might compete out in the marketplace for sure with our goods and services. But as so far as our concern around responsible AI, I think it's been a fairly collaborative bunch.
It's a big job that you have. What's your top priority?
Right now, the top priority is making sure that we are expressing our voice. We've been in this space for 48 years now. AI is getting a lot of attention, particularly Gen AI. It's the kind of the star in the universe. But we've been at this for 48 years right now. We want to bring a measure of wisdom, if you will, and we've been through a few cycles. And we want to just be able to bring some of that experience to the current cycle and hopefully bring a level of awareness to not just the tech sector, but to the regulators, to the consumers, to citizens writ large. Because overall, we need to raise a level of literacy around this topic. I think it's when that occurs is when we'll be in a better position to really be able to put our arms around safeguards.
Reggie, really great to have you with us here in Sydney. Reggie Townsend, who's a Vice President of Data Ethics Practice at SAS. We do have more ahead on the Asia Trade. This is Bloomberg. Bloomberg opinion columnist Bill Dudley says he's no longer in the higher for longer camp and thinks the Fed should cut rates as soon as next week. The former New York Fed president argues that macro fundamentals have changed and waiting until September unnecessarily increases the risk of recession. The US yield curve steepened sharply following those comments from Dudley. Meanwhile, former US Treasury Secretary Larry Summers is pushing back against calls for the Fed to start cutting rates next week. He told Bloomberg that policymakers should wait a little longer.
On current facts, I would not cut rates next week. I think we need to be very careful about making the move, especially since when the Fed starts to cut rates, there will inevitably be an expectation of some cascade of rate cuts. It's certainly true that as the news has come in over the last several months, it's tended to be on the low inflation and on the soft economy side. And so markets have now adjusted to expect a rate cut in September. I had thought that that was a possibility, but not a probability. On current facts, I'd certainly regard it as a probability, both in terms of what should happen and what will happen. But I think it's the better part of prudence, particularly in so unsettled an environment where the deficit figures are coming in a very problematic way. I think it's the better part of prudence for the Fed to wait a little longer before cutting rates.
As you say, Larry, it's such an unsettled environment right now, and part of that unsettlement is what happens in November, which of these very different economic approaches we have in the White House. Give us a sense, from the Fed's point of view, do they try to take that into account, or they sort of ignore it? Ignoring it seems to be like putting your head in the sand.
I think the Fed needs to consider all the factors in the environment, whether it's the fiscal policy, whether it's business confidence. But obviously, the Fed needs to stay out of politics and not be trying to tilt in either direction. So I'd expect the Fed will be watching the markets, and the markets will be watching all the political uncertainties. And so in those ways, the political uncertainties will factor into the Fed's decision making. But certainly I don't think the Fed should be explicitly getting involved in politics. I do think that there is an underestimation in the political clash generally, but a far more severe underestimation on the Republican side of the fiscal policy risks in the current moment, where the Republicans are talking all about deficit increasing measures, whether it's on the defense spending side or on the tax cutting side, with nothing really pointing towards any kind of control, and at the same time making it harder for the country to sell its debt by trashing the currency. I think they are setting up the United States for a kind of Liz Truss moment. The Democrats are not as focused in this political year on the fiscal challenge as I suspect a new administration may have to be. But at least when fires are burning, they are not throwing gasoline. And that's a very important distinction.
Former US Treasury Secretary Larry Summers there speaking with Bloomberg's David Weston. We are just getting some more data crossing the Bloomberg when it comes to kind of painting out that broader picture of what we're setting up with the Bank of Japan and the inflationary pressure there in Japan. We are seeing the PPI services number just coming in for the month of June at 3%, a handy beat on that 2.6% expectation, and certainly picking up pace from 2.5%. So that is really sort of a part of the data that's really setting the BOJ up for a rate hike at the end of July. We did heard from Governor Ueda earlier in June saying that it is really down to the macro data, and this is incrementally one more, potentially also one more that can drive the yen further on this, the rally that we've seen. And one of the biggest sort of victims of this yen rally has really been the Aussie dollar. We are seeing the Aussie dollar falling to the lowest since May against the greenback. This sort of 8 days losing streak continued, the longest in just about a year. And part of this pressure has really been the unwinding of that basket of carry trades as a result of the drying up of cheap yen funding, with the momentum continuing to be built in the Japanese currency that was largely funded by short yen positions. But we're also seeing compounding that weakness in the Aussie dollar, that pullback in commodity prices, China's gloomy outlook continuing. Taking a look at what we're expecting at the top of the hour, we are expecting, of course, President Biden to speak. This is really the first time since we had that statement where he confirmed the discontinuance, of course, of his re-election campaign. We're expecting President Biden to cast his exit from the re-election campaign as a bid to unite the nation in his Oval Office address. That's coming up next. Those first public remarks since the end of his campaign. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we're really watching US politics as well, right? We're expecting this speech from President Biden. This is his first public remarks, or spoken remarks, if you will, since the announcement of the ending of his re-election campaign. And I guess he really kind of wants to project this idea of unifying the nation.
Yeah, and also the idea of potentially passing the torch to the next generation. We have had a sneak preview of some of his remarks. Some excerpts of that speech have been released in advance. But the focus now going to shift to his legacy, his reasons for stepping down, and also what role he's going to play in the campaign.
Yeah, and certainly, you know, his sort of presence looms large, right, towards the end of his presidency. And we are also seeing Kamala Harris, you know, as you say, the new torchbearer, if you will. We're getting close to the Paris Olympics, of course, it's the parlance, but, you know, she's really hit the ground running with a number of rallies and also really honing in on some of the sort of key support base. We know that she has a support from a lot of, women, black electorates, but really kind of trying to double down on that and underscoring how much that sort of, minority aspect is going to be key to her campaign. Of course, she's making history in this campaign for a number of reasons, but not just as a woman, but as a woman of colour as well. So we are, in the meantime, of course, watching all of this as we get to the market open, and there's a lot of volatility going on, particularly being caused by just the continued and maybe surprising resilience in this yen rally that we continue to see. That's really causing the sort of downside effect for Japanese equities at the moment. The Nikkei 225 looking pretty soft right from the start of trading here. And we are seeing the likes of the Aussie dollar really seeing that decline against both the greenback and also the yen. But a lot of this sort of, cross-asset effect is being caused by the unwinding by a lot of these yen positions and the cheap yen funding that we're starting to see dry up. A lot will depend on what we see from the BOJ. Before we did get the PPI numbers, which certainly support, that direction for the data to warrant more tightening.
Yeah, certainly a little more evidence there on the tightening side of the narrative. The market just opening here in Australia as well, of course, and perhaps unsurprisingly, setting up for a risk-off day, considering the sell-off that we saw for the US. All right, we're getting remarks now from President Biden. Let's listen.
In this sacred space, I'm surrounded by portraits of extraordinary American presidents. Thomas Jefferson wrote the immortal words that guide this nation. George Washington who showed us presidents are not kings. Abraham Lincoln, who implored us to reject malice. Franklin Roosevelt, who inspired us to reject fear. I revere this office, but I love my country more. It's been the honor of my life to serve as your president. But in the defense of democracy, which is at stake, I think it's more important than any title. I draw strength and I find joy in working for the American people. But this sacred task of perfecting our union is not about me. It's about you, your families, your futures. It's about we, the people. And we can never forget that. And I never have. I've made it clear that I believe America is at an inflection point. One of those rare moments in history when the decisions we make now will determine our fate of our nation and the world for decades to come. America's going to have to choose between moving forward or backward, between hope and hate, between unity and division. We have to decide, do we still believe in honesty, decency, respect, freedom, justice, and democracy? In this moment, we can see those we disagree with not as enemies, but as fellow Americans. Can we do that? Does character in public life still matter? I believe I know the answer to these questions because I know you, the American people. And I know this: we are a great nation because we are good people. When you elected me to this office, I promised to always level with you, to tell you the truth. And the truth, the sacred cause of this country, is larger than any one of us. And those of us who cherish that cause cherish it so much, a cause of American democracy itself, must unite to protect it. You know, in recent weeks, it's become clear to me that I need to unite my party in this critical endeavor. I believe my record as president, my leadership in the world, my vision for America's future, all merited a second term. But nothing can come in the way of saving our democracy. That includes personal ambition. So I've decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation. You know, there is a time and a place for long years of experience in public life. But there's also a time and a place for new voices, fresh voices, yes, younger voices. And that time and place is now. Over the next 6 months, I'll be focused on doing my job as president. That means I'll continue to lower costs for hardworking families, grow our economy. I'll keep defending our personal freedoms and our civil rights, from the right to vote to the right to choose. I'll keep calling out hate and extremism. Make it clear there is no place in America for political violence or any violence ever, period. I'm going to keep speaking out to protect our kids from gun violence, our planet from climate crisis that is the existential threat. And I will keep fighting for my cancer moonshot so we can end cancer as we know it, because we can do it. And I'm going to call for Supreme Court reform because this is critical to our democracy, Supreme Court reform. You know, I will keep working to ensure America remains strong and secure and the leader of the free world. I'm the first president in this century to report to the American people that the United States is not at war anywhere in the world. We'll keep rallying a coalition of proud nations to stop Putin from taking over Ukraine and doing more damage. We'll keep NATO stronger, and I'll make it more powerful and more united than any time in all of our history. I'll keep doing the same for our allies in the Pacific. You know, when I came to office, the conventional wisdom was that China would inevitably surpass the United States. That's not the case anymore. And I'm going to keep working to end the war in Gaza, bring home all the hostages, and and bring peace and security to the Middle East and end this war. We're also working around the clock to bring home Americans being unjustly detained all around the world. You know, we've come so far since my inauguration. On that day, I told you, as I stood in that winter, we stood in a winter of peril and a winter of possibilities. Peril and possibilities. We were in the grip of the worst pandemic in the century. The worst economic crisis since the Great Depression. The worst attack on our democracy since the Civil War. But we came together as Americans, and we got through it. We emerged stronger, more prosperous, and more secure. Today we have the strongest economy in the world, creating nearly 16 million new jobs, a record. Wages are up. Inflation continues to come down. The racial wealth gap is the lowest it's been in 20 years. We're literally rebuilding our entire nation, urban, suburban, rural, and tribal communities. Manufacturing has come back to America. We're leading the world again in chips and science and innovation. We finally beat Big Pharma after all these years to lower the cost of prescription drugs for seniors. And I'm going to keep fighting to make sure we lower the cost for everyone, not just seniors. More people have health care today in America than ever before. And I signed one of the most significant laws helping millions of veterans and their families who are exposed to toxic materials. You know, the most significant climate law ever in the history of the world. The first major gun safety law in 30 years. And today, the violent crime rate is at a 50-year low. We're also securing our border. Border crossings are lower today than when the previous administration left office. I've kept my commitment to appoint the first black woman to the Supreme Court of the United States of America. I also kept my commitment to have an administration that looks like America and to be a president for all Americans. That's what I've done. I ran for president 4 years ago because I believed and still do that the soul of America was at stake. The very nature of who we are was at stake. And that's still the case. America's an idea. An idea stronger than any army, bigger than any ocean, more powerful than any dictator or tyrant. It's the most powerful idea in the history of the world. That idea is that we hold these truths to be self-evident. We're all created equal, endowed by our Creator with certain inalienable rights: life, liberty, pursuit of happiness. We've never fully lived up to it, to this sacred idea, but we've never walked away from it either. And I do not believe the American people will walk away from it now. In just a few months, the American people will choose the course of America's future. I made my choice. I've made my views known. I would like to thank our great Vice President, Kamala Harris. She's experienced, she's tough, she's capable. She's been an incredible partner to me and a leader for our country. Now the choice is up to you, the American people. When you make that choice, remember the words of Benjamin Franklin hanging on my wall here in the Oval Office, alongside the busts of Dr. King and Rosa Parks and Cesar Chavez. When Ben Franklin was asked, as he emerged from the convention going on, whether the founders have given America a monarchy or republic, Franklin's response was, a republic, if you can keep it. A republic, if you can keep it. Whether we keep our republic is now in your hands. My fellow Americans, it's been the privilege of my life to serve this nation for over 50 years. Nowhere else on earth could a kid with a stutter, from modest beginnings in Scranton, Pennsylvania, and Claymont, Delaware, one day sit behind the resolute desk in the Oval Office as President of the United States. But here I am. That's what's so special about America. We're a nation of promise and possibilities, of dreamers and doers, of ordinary Americans doing extraordinary things. I've given my heart and my soul to our nation, like so many others. I've been blessed a million times in return with the love and support of the American people. I hope you have some idea how grateful I am to all of you. The great thing about America is here, kings and dictators do not rule, the people do. History is in your hands. The power is in your hands. The idea of America lies in your hands. We just have to keep faith, keep the faith, and remember who we are. We're the United States of America, and there's simply nothing beyond our capacity when we do it together. So let's act together, preserve our democracy. God bless you all, and may God protect our troops. Thank you.
So President Biden there speaking from the Oval Office. Let's bring in Balance of Power co-anchor Kayleigh Lyons now joining us from Washington. Kayleigh, President Biden saying there that he can't let personal ambition get in the way of democracy. He looked composed there, but this is, of course, a very controlled environment. What were your key takeaways?
Well, this was a speech, Paul, that had many different facets. In part, this was a speech about President Biden's legacy. He heralded some of his accomplishments, promises he said he kept, including, for example, appointing a black woman to the United States Supreme Court. He talked about the economy. He also talked about what he wants to do with his remaining time in office when it comes to economic growth, to lowering costs, issues like climate change and gun control that he would still like to address. And, of course, he referenced foreign policy issues as well, especially important as we await his meeting with Israeli Prime Minister Benjamin Netanyahu at the White House tomorrow. He talked about how he does want to see an end to the war in Gaza and bring peace and security to the Middle East. He also referenced other U.S. alliances, including NATO and the ongoing war from Russia against Ukraine. But this was a speech not just about him as a person. I think he made that very clear. He was trying to characterize his decision not to seek re-election, not to run for a second term, as an act that he did selflessly in the name of American democracy. At the end of the day, this does seem like he wanted this speech to be about the preservation of American democracy. He talked about this notion that his personal ambition cannot come before democracy. He said the defense of democracy is more important than any title, and it became clear to him that he needs to unite his party in that name. He also pitched it forward to November, essentially telling the American people, in his words, while it has been an honor to serve them, that it is now in their hands the way in which the country moves forward. He, of course, endorsed Vice President Kamala Harris. He mentioned her there, calling her capable and tough, but essentially said it is now in the hands of the American people to decide what direction they want the country to go in after he leaves office.
There's also the question, of course, as we look forward, what sort of role he's going to play in that campaign process for his vice president.
Yeah, there is. Of course, really what he focused on in this speech, it seems, is what he would still like to do in his presidential capacity from the Oval Office, knowing, of course, he needs Congress to cooperate if he wants to get much more done legislatively. He may be looking to take executive action, for example, in some of these areas. But all of that will be in his official capacity as the president of the United States, not as someone who is a campaign surrogate necessarily for his vice president, Kamala Harris. He said there he has made his feelings on the matter of the election in November very clear. We understand based off of the fact that he called into the campaign headquarters in Wilmington, Delaware earlier this week, that he does intend to provide whatever service Kamala Harris needs of him in terms of the campaign, that he will join her on the trail. Even though he's not on the ticket, he says he will be actively engaged in the process. But clearly there can only be one president at a time. And while America sorts out who it wants to be the next president come January of 2025, for the time being, that president is Joe Biden. He is still going to be sitting in that Oval Office where he spoke to the nation from tonight. Many of these decisions will still be his. Of course, the decisions as to how close he will get to the Kamala Harris campaign largely will be up to her. But this is kind of an unusual situation to navigate in American politics. Remember, we haven't seen a moment like this in roughly 60 years, since 1968, when Lyndon B. Johnson also gave a similar Oval Office address to the one we all just witnessed, deciding not to run for a second term. So really, we're seeing American history be written here in a very real way.
A key difference here, I guess, this time, Kayleigh, though, is Kamala Harris is going to have the nomination sewn up before we get to the convention. But some of the rhetoric also looks like it's getting sewn up as well. President Biden there talked about the secure border, how crossings are lower today than when before he took office. Are we getting a bit of a preview here on the sort of ground where this election is going to get fought?
Oh, absolutely. And you've already seen Republicans attacking Kamala Harris on the border as early on in the Biden administration. That was an issue with which the president really charged her with addressing. Talk of Kamala Harris being the quote unquote border czar. And already you are seeing Republicans really taking that record and pitting it against her as she has become the presumptive Democratic nominee with pledges from enough delegates to secure her nomination. That will happen before the convention in Chicago. It will be a virtual roll call that will take place during the first week of August, which is why Kamala Harris is also pressed now to find expeditiously a vice president to be on that ticket with her. But certainly the border issue is one that is going to be high on the minds of voters in this election. It's one that she is going to have perhaps difficulty navigating, knowing that because she is currently a member of the current Biden administration, having served President Biden for the last 3.5 years as his vice president, his issues, to a large extent, are her issues. So she's going to have to figure out how she can create some distance, speak about her own policy, and try to convince voters to vote for her in November rather than Donald Trump.
Balance of Power co-anchor Kaylee lands there in Washington, as we just heard that pretty rare Oval Office address from President Biden. Take a look at watching when it comes to just the first 15 minutes or so of trading here in Asia, particularly when it comes to this sustained drop that we continue to see in Japanese equities. The Nikkei 225 now on track for its worst day, really the biggest loss that we've seen across that one-day basis since about the middle of April. We're down about 2.4% there. The Topix also suffering to the tune of about 2%, and this even as BlackRock expecting the BOJ to hold rates for longer in what would be a supportive measure to stocks. But at the moment, the momentum for the yen is going in one direction, and that is one of the strength, particularly as we had that Japan PPI services number again incrementally just supporting the case for the Bank of Japan to tighten in its end of the month meeting that we're looking ahead to. Dollar yen trading at 153.81 at the moment. We're also seeing quite a bit of sort of cross asset and some of those trading pairs, including the likes of the Aussie, seeing sustained weakness as well as we see that unwinding of yen short positions and the drying up of cheap yen funding as well for those carry trades.
Well, let's take a look at how we're tracking in Australia. Relatively speaking, not quite as badly, but we're still off in Australia by almost 1% now. One of the stocks worst performing at the moment is Fortescue Metals. This is the pure play iron ore company. Announced fourth quarter shipment data a little bit earlier. That was solid enough, but iron ore prices have, of course, been slipping on concerns about weak China demand. Also similar concerns regards the oil price there. In terms of the treasury space, we've seen yields slipping as well. They continue to slip, and the spread between the 2s and the 10s contracting to the smallest margin we've seen since 2023. Bets, it appears, on Fed easing increasing, Heidi.
We're also watching Korea, particularly when it comes to the pretty sizable miss that we had on GDP numbers. That was sort of course, worsened by the fact that we had an unfavourable base effect on the quarter-on-quarter basis, but that contraction perhaps a little bit steeper than what economists had been expected. On the other hand, though, we do see, despite the broader economy shrinking, SK Hynix, that broader sort of AI demand story, continuing to stay quite resilient. Those numbers were better than even what was expected, and expectations were quite high going into that release, given that we had favourable numbers out of Micron and Samsung as well. But those shares are actually tumbling by the most in 3 months after that broader AI sell-off, despite the likes of revenue more than doubling on demand for AI training memory. CapEx likely more to be expected this year, though. More ahead on the Asia trade. This is Bloomberg. Well, SK Hynix says revenue more than doubled last quarter, stoking hopes that a global boom in spending in AI hardware will persist through this year. Our executive editor for Asia Technology, Peter Elstrom, joins us now. And so, really robust numbers out of SK Hynix. Investors are looking at returns right now, though.
Yeah, that's exactly right. So the numbers were pretty good out of SK Hynix this morning. SK Hynix makes a special kind of memory called HBM chips that are used to train these AI models in conjunction with the AI chips that NVIDIA sells to these companies. So the numbers were really very, very strong. Revenue more than doubled. It would exceeded analyst expectations. Profits were also way, way up. But what we're seeing in the market is that shares are down quite a bit, the most in 3 months, as you alluded to earlier. It's a pretty big drop in the stock at SK Hynix. And that really is spillover from the negative sentiment that we saw in the U.S. trading session where NVIDIA was down 6.8%. A lot of the tech stocks were down. And the big disconnect here is that people are spending a lot of money on the chips from NVIDIA and from SK Hynix to be able to invest in these AI models. They're putting a lot of money, hundreds of billions of dollars, into these kinds of AI models. But on the other side, we're not seeing those customers actually generate a whole lot of revenue from that at this point. So it's like they're spending a lot of money on the picks and shovels, but they're not discovering gold at this point. So that's pretty important for them.
Peter, longer term, though, is the story here still intact? Do we maybe expect to see some dip buyers come in tomorrow?
Well, I don't think there's any question that the tech companies and their customers see a lot of potential in AI, and they want to continue to make these investments in AI, develop new kinds of models, everything from ChatGPT to much more sophisticated applications of AI services across enterprises, across consumer applications too. But the question is how they're going to generate revenue from that, and if that revenue growth is going to be significant enough to be able to justify some of these big investments right now. The kinds of chips that they buy from NVIDIA and they buy from SK Hynix are very expensive. There's a shortage across the industry at this point, so they're paying premium prices, and yet they're not able to show revenue growth on the other end of that.
All right, Executive Editor for Asia Technology, Peter Ahlstrom there. Plenty more ahead. This is Bloomberg. Let's get the latest from the corporate front. The NBA has announced new long-term TV contracts with Walt Disney, Comcast and Amazon, spurning long-standing partner Warner Brothers. The league rejected Warner's bid to match Amazon's offer of about $1.8 billion a year, setting up a potential legal battle. The new agreements are set to generate $76 billion in fees over 11 years. IBM gained after the bell as it reported a jump in bookings for its AI business. It says bookings for AI consulting and software since mid-2023 have exceeded $2 billion. Second quarter sales increased 2% to almost $16 billion, beating analyst estimates. More ahead on the Age of Trade. This is Bloomberg. All right, let's take a look at some of the big chip names in Asia at the moment. As you might expect, it's kind of an ugly picture right now, but look at SK Hynix, off by 6.3%, and that is after announcing a pretty decent set of numbers for the second quarter. Profit beating, reversing the year-on-year loss. SK Hynix, though, forecasting higher capex. That might be part of the concern here. We saw a big tech sell-off in the US, and it appears everything is getting chucked out in the wake of that. Well, never mind. Our next guest is overweight on tech, like semiconductors, as well as the picks and shovels play on AI. Let's bring in Kieran Calder now, Head of Equity Research for Asia at UBP. So, Kieran, a great day to talk to you, given your overweight position on tech. What do you make today of that sell-off? As we were talking to Peter Ahlstrom a minute ago, he says there's concerns that returns aren't really matching up with the big spending that's going on at the moment.
Yeah, good morning. So obviously, you know, I guess the correction that's happening right now is coming at the end of an extended rally in semi names on the back of AI theme over the last, let's say, 18 months. Valuations are a bit stretched, and positioning is, nobody's underweight semiconductors. So, what we think is, as we, for example, the IBM numbers where we saw that they're on the back of the build out in AI capability are able to generate a lot of revenue on the back of AI services. So we think sort of this is the next stage, but you still need to continue to build out the infrastructure, and this is still semiconductors is the best play on this. We would also be a little bit cautious, though, because semiconductors has become a extremely political sector related to China, and in that respect becomes part of the political calendar in the U.S. So we think we wouldn't be sort of bottom fishing immediately on the back of the current sell-off, but we do still think that this is an area that there's a lot of great companies with a lot of great opportunities.
So, Kieran, if you're not bottom fishing immediately, does that suggest maybe you think there's a little bit more to run in terms of this correction?
I mean, certainly could be. As we mentioned, positioning is not light on semiconductors, including us. The next incremental buyer, you probably need to see a little bit either a sharp improvement in the outlook, which is expectations are already very high, or a better valuation, which would imply lower prices. So I think the sort of weakness can persist for a little while, but ultimately we belong semis.
You mentioned the political volatility, right? Does that mean you would be looking at names that perhaps already have less or no exposure to China, or is that something that you would want to wait until post-November to make a decision on?
Yeah, I mean, it's a difficult one. Obviously there's export restrictions at the sort of bleeding edge of technology where, companies are, banned from selling to China. But this will also drip out into some of the lower end or lower spec technologies. Overall, it's something to be cautious of, but it's name by name, we're not sort of identifying names that are China or not China.
You're actually in the camp when it comes to the Bank of Japan that they could wait, right? Some of the recent data, it is mixed, but that sort of reflationary pulse is clearly setting in there. Do you think that we'll likely see overall kind of favourable impact on equities if there is a pause, or does the strength of the yen suggest that this is pretty much a done deal?
Okay, I mean, I think that the strength of the yen suggests that the market is certainly expecting, or increasingly expecting, that the Bank of Japan is going to move again with next week's meeting. So obviously the risk, given that the Bank of Japan is extremely cautious, and there have been comments around consumer spending is not that strong, et cetera, that they could wait, and that would obviously be a surprise. If we back up to the equity market in general, our view is that after the initial move in March, we've had a number of sort of one-time events that have really normalized the market in Japan, and we sort of characterized it as the end of the beginning. And we think from here, it's much more stock and sector specific where you want to be. We do think that amongst financials that this is an area where despite what happens next week at the meeting, the changes, abandoning yield curve control, et cetera, have led to widening of spreads, and this is good for bank earnings, also not bad for insurance. And these are the sectors which have been leading topics so far this year, and we think we find a lot of opportunities in those areas still on the back of the changing interest rate backdrop.
Yeah, I'm wondering if we can get your view on our Bloomberg question of the day today. Does the yen move that we've seen signal the end of FX carry trades?
Well, so FX not my specific focus, but I think you should never say it's the end of the carry trade. I think there's a specific reason around the strengthening of the yen at the moment, people unwinding shorts, et cetera. So I would say no.
We've got another big central bank decision coming up, of course, and that is the Fed. What are your expectations around easing, particularly whether or not we see it before the election? Because there's, of course, a risk of the Fed wanting to not get pulled into a potential political debate.
Sure. Well, so before the sort of recent encouraging inflation data, we had been expecting the first cut after the election, so in December. But numbers have been pretty good so far. We don't think the Fed is ready to cut in July, but we increasingly think that September is a likely time for the first cut, and obviously that's what the market thinks as well. In context of your question, that's a couple months before the election, and I think would avoid any of the difficulty that you alluded to. But of course, it's all dependent on we need to see a continued decline in inflation and inflationary trends.
When it comes to sort of EM Asia, that popular trade, of course, has been inflows into India, and a lot of that at the expense of China, right? Do you sort of buy into that narrative? India's looking still very expensive, and there's the capital gains tax to be concerned about, right? Are you conversely kind of tempted by how cheap Chinese equities are?
So for us, we've been underweight China for a while. The sort of mini recovery we had in May, obviously that's gone away again. We think that the situation in China is complicated and will take a long time to resolve, especially related to property and how that relates to banks, et cetera. So then obviously the other, as you mentioned, the other large market to look at is India. And we've been positive on India. It's not the cleanest story, as you mentioned. Capital gains, for example, changing. It's expensive, but it's also more consistent in terms of earnings growth and meeting earnings expectations than, for example, China has been. So we do prefer India to China, but again, would like to try to buy on a bit of weakness in India, give us a bit of buffer against higher valuations, and not tempted at the moment by China.
I think few could blame you. Kieran, always great to chat with you. Kieran Calder, Head of Equity Research for Asia at UBP. Well, South Korea's economy flipping back into reverse last quarter after hotter than expected growth at the start of the year. Our Bloomberg Korea economist Hyosung Kwang joins us now. So Hyosung, of course, it was an unfavourable base effect, right, quarter on quarter, but still the numbers were unexpectedly bad, even for Bloomberg Economics. How do you, I guess, assess that, particularly in terms of the momentum for growth going forward?
I think that it is more concerning than the numbers shows. So the contraction in GDP itself is a bad thing, but it's also natural that we see a weaker growth after a rapid jump in GDP in the prior quarter. That is the case for the South Korea. But if you see the component of GDP which contributed to negative growth, it is really concerning. So all the domestic components such as private consumption and facilities investment and construction investment slashed GDP growth and GDP, which implies that the positive spillover from growing exports has been quite weaker than we anticipated, and probably it says that it will imply that the recovery of domestic demand, which we are waiting for, could be delayed further than anticipated.
So we've got the rates in Korea restricted 3.5% at the moment. They've been parked there for a while. Is there now a bit of impetus for the BOK to act?
So I think the BOK probably keep its growth outlook in August, but it will raise risk assessment for growth outlook because that there's a high uncertainty about how the restructuring in the property project financing will play out, and also a cooling U.S. economy could slow the demand for computer chips, which is the main growth driver in 2024. But even having said that, the BOK probably looked through the weaker growth momentum. Now BOK is more worried about the rapidly rising home prices in Seoul and the surrounding area, and BOK also worried that the implication on the household debt, so that the risk to the financial stability risks. So the BOK probably wait to see how the housing prices will evolve and how the government would react with macroprudential measures.
It's interesting, AI for South Korea, it's not just about chips, right? It's also about how potentially the government could engage AI and its benefits to boost productivity. How bad are the demographic challenges for South Korea right now?
So demographic challenge is quite high because that the population is aging rapidly, and then the birth rate is record very low in terms of that probably the lowest in advanced economies. I think the demographic challenge is very concerning. But as you mentioned, that that the Korean government try to boost the productivity with technological innovation. We need to see how it will succeed. Yeah.
Certainly a longer-term issue confronting so many of these North Asian economies. Our Bloomberg Korea economist Hwai Song-Kong there with the latest on South Korea. And of course, the numbers from South Korea are certainly not helping. Even the numbers from SK Hynix are better than expected, also not helping this kind of tech-driven, but now pretty broad-based sell-off. I think it's pretty telling, Paul, that you're not just seeing, chip makers being thrown out the window. You're seeing just about every sector being thrown out, baby and bathwater as well, Brad. A lot of these concerns seem to be over global growth as well. If you take a look at how much of the losses we're seeing centred across commodities, mining, minerals names.
Yeah, that's right. It's not just tech that we're seeing sell off today. And I mean, here in Australia, we're seeing one of the worst performing stocks. In fact, Fortescue Metals, it was out with production numbers, and they weren't that bad, and production's expected to remain pretty steady for the coming year. But again, it's concerns over the China growth story. We've all forgotten about that today in the wake of the tech sell-off, but it's still there in the background.
I don't think Chinese investors have forgotten, but yes. But yeah, we are still seeing kind of that sentiment driving all of this, as one investor saying it's waking up to all of that spending and capex into AI and realizing that it's much more of an expense right now rather than generating revenue. We kind of all knew this, but it's taken markets a while to get to this point. More ahead on the Asia trade. This is Bloomberg. Well, Taiwan Stock Exchange will remain shut for a second day due to Typhoon Gaemi. The storm is set to approach China after tearing through the Philippines and Taiwan. Bloomberg's Avril Hong has the details. So, Avril, we've seen the Philippine Stock Exchange reopening operations today, but still a lot of disruptions.
Certainly, and we're also seeing how China is kind of bracing for potentially what might come, as it is the eye of the storm has been going over the Taiwan Strait. It is approaching China. It's expected to hit China with lower speeds than when it was cutting across Taiwan. China has already issued its highest storm warning. I think it's the first time that we're seeing this year. It's been tearing across the Philippines as well as Taiwan, and Taiwan had already been bracing for landfall. Ahead of this, it was already seeing strong winds and rains. Hundreds were already being evacuated from disaster-prone areas. We've seen about 50 people injured. One person has been killed. The Taiwan Stock Exchange is shut for a second day. I think this is the first time since 2016 that we've seen 2 consecutive days of the stock exchange being shut because of a typhoon. We also know how the chip maker TSMC says it's making these routine precautions, and we have some estimates putting the losses from the storm at potentially as much as $25 billion.
How about what's happened in the Philippines? What do we know about the extent of damage there?
Yeah, I think the full economic and human costs from the typhoon might take days for us to actually fully understand, but we already see how it's really devastated the Philippines. The capital region has been placed under a state of calamity. We've seen a price freeze on basic necessities, release of relief funds, that's been approved as well. And the typhoon actually intensified some of these monsoon rains. So at least 4 have been killed in a landslide, more than 500,000 displaced. We see how most things are still shut in the Philippines, although, as you mentioned earlier, the Philippine stock market reopens later today, guys.
All right, Avril Hong there in Singapore. We have more ahead on the Asia trade. This is Bloomberg.
Well, ANZ Group CEO Shane Elliott says the bank has suspended and terminated traders in the wake of allegations about misconduct in its bond trading division. Our finance editor Adam Hay joins us now. So, Adam, what are we hearing?
Well, really, the crux of this update is that there have been some quite key personnel changes at the bank, and that's included suspensions and firings of some key traders, but also essentially a rejigging of the management of the Sydney dealing room, which is, of course, one of the key areas of focus of this whole investigation around some of the allegations of misconduct in this area, and also, specifically on the bond trading reporting that happened when ANZ they have to provide at the end of every quarter details on their trading volumes to the AOFM, and this was the first time in this statement here that they've said, we did make mistakes in that 22-23 financial year. We're even Elliott himself saying that he's spoken to the AOFM's CEO and he's apologised personally to him for that problem. They take full responsibility for that. But then, beyond that, it gets a bit more tricky and a bit more sensitive around just how these investigations are going to play out. Because essentially, ANZ are trying to characterise this as 3 separate investigations. One that specifically relates to the way that a government bond sale got done last year and ANZ's role in the syndication and trading of that. Secondly, around the bond trading data, which we've had some more information and this apology on today from Elliott himself. But then the third, which is a broader misconduct investigation, a broader look into what's going wrong in the culture of the bank, or certainly the culture within certain individuals or certain members of staff at the bank. So there are a number of investigations going on concurrently, and of course, outside legal counsel have been brought in to try and help the bank get to the bottom of what's happening and why these problems have gone on.
Well, of course, it was just yesterday that we had the Securities Exchange Commission Chair Joe Longo sitting where you're sitting now, talking about how this investigation is probably going to run into 2025. And already we've had ANZ saying, well, some bankers have fired, some traders have been suspended. Around scenarios about what happens next, what are we talking about in terms of penalties?
Well, the difficulty is, Paul, is knowing, how long those investigations are going to run for. And I think that was Longo's point when he spoke here yesterday. It's unlikely to resolve quickly, which is why he was saying, well, probably the end of this year, maybe into next year. But clearly, Shane Elliott himself wants to resolve things very quickly. There's a lot of pressure building on him. He's meeting with his board, pretty much on a daily basis at this point. And clearly the pressure is mounting on him, his role, his responsibility within all of this. And there's certainly a number of people out there who have suggested that, his job is on the line at this point. So the difficulty around what kind of fine may result as a result of this is still, it's too early to say, because we haven't had the conclusion of any of these investigations. So I think at this point we still need to work out, how much longer this is going to run for, and then maybe some sense of where, if any, wrongdoings found in other areas beyond what we know today, what kind of a fine would be put in place.
All right, Finance Editor Adam Haig there. Let's get to some other stories that we're following. 2 of China's biggest banks have lowered rates on some deposit products in a bid to ease pressure on margins after cuts to lending rates earlier this month. ICBC and Agbank both cut rates on some deposits by as much as 20 basis points. Chinese lenders' net interest margins hit a record low in March. The 3 Chinese automakers singled out by the EU in its anti-subsidy investigation have resumed negotiations with regulators. Bloomberg understands that SAIC, Geely and BYD have all been granted hearings to argue against additional tariffs. In a statement, SAIC says the EU had requested sensitive business information and ignored key parts of its submission.
I'll take a look at how we're setting up for some other major markets, including China, coming online in the next hour or so. We are also watching US futures, of course, as this tech-led declines really continue to take place. And you take a look at how we're trading here in Asia, and just about every market and every sector in the red there. It really isn't just tech or chip-related names. We're seeing kind of the baby being thrown out with the bathwater in what is really a pretty wholesale sell-off. S&P futures bowed that perhaps we will see maybe a little bit of a recovery after we did see yet another ugly session based on these concerns over the sheer amount of spending that we've seen in AI, and perhaps not a whole lot of return at this point. Hang Seng futures off by about 0.6%. A50 China futures looking actually pretty flat at the moment. We had declines of almost 2% for the Nasdaq Golden Dragon Index overnight, so we do sort of see that as portending more weakness, but perhaps compared to the rest of the region, we could actually see maybe a little bit more of a measured session there. And certainly in the previous session, we had Chinese stocks in the worst slump since about January. A lot of these policy hopes are really fading.
Yeah, let's take a look at some of these pairs against the Japanese yen as well. The yen continuing to strengthen, 153.31 against the dollar as we count down to the Bank of Japan meeting. And we had our hot PPI services read as well, 3% for the month of June, a sharp acceleration, more than was anticipated. So those bets piling up now that we're going to see some tightening from the Bank of Japan, and some of these carry trades look like they're starting to unwind. That is it from the Asia trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.